add this to the room and announce it. Everybody can follow along. Trading. All right, make sure that you can open this up. And other things I want to do is I want to go ahead and announce the journal. And I think we have reversal times. Yep. And those other two may or may not be referred directly to it. All right. Welcome to Members eLearning for 17 Jan 2019. Glad everybody could be here. Those who are not there attending virtually after the fact, you're welcome as well. Would like to point out a couple of things here before we get started. I do have a StockTwits account that I post fairly regularly to, Top Gun Trading on StockTwits.com. You can subscribe to that and get notifications on anything that I post there. I will post to the room first and then the StockTwits. I don't put everything that we do in the room on StockTwits. The YouTube channel is listed here. It's a bit.ly hyperlink, so it makes it shorter. TopGunTrading2@gmail.com is my email address, and obviously we're on Hit and Run Candlesticks. The agenda is I'm going to talk about primarily what I go at a normal trading day, whatever normal is. And what I'd like to do is to have another session next week that talks about trading earnings. So I think we're in earnings season. It would probably be nice for us to do that. And I've got the charts really at the back end of this presentation, which really talks about trading gaps, and we could go over that. I'll stop, and it's in the backup material. You can look over it. But what we'll do is we'll cover that next week, and one of the days that works for us best, probably Wednesday or Thursday, because I can't do Monday or Tuesday. All right, the nightly and pre-market routines. We'll go punch the clock, reversal times. People would ask when the morning session ends and when should they trade the afternoon. And I got some stuff about journal entries, and obviously we covered the YouTube channels. All right, what does my nightly and pre-market routine look? Well, especially after the market closes, there's usually some news, especially if you're in earnings season. You'll get people that'll report after the bell, and they'll move, and you can have plenty of time to look at the charts and analyze them and not be hard pressed to do things very, very quickly. And now, the one problem with looking at stocks in after hours and in the pre-market is that once we open up for regular trading hours, we could get a change in sentiment due to a number of factors. One, the market makers and whatever could be just trying to chum the waters and fake people out. Number two, there could be a conference call that goes on that starts during or after the regular open at 9:30, and because of what they say on the conference call could change what the traders and investors are looking at. I think that happened with Alcoa today. So we were a little flexible. We'll go over that as an example here. But you want to check? I want to check my earnings list. I create an earnings list every Sunday night or Sunday afternoon. I go on and do a weekly look at the earnings. Now it gets really long, and I get earnings reports and whatever. I don't want to look at stocks that trade under a half a million shares, but if I want to day trade it, I want to be closer to a million. Okay, and as we get more and more stocks out there in the next couple of weeks, well, that's definitely what's going to happen. I'm going to make the stock have higher volume. I'll weed out some that if I had only a few earning stocks like we did today, I'd go down to about a half a million on an average. All right, and I have average to range and price factors and the whole 9 yards. So I have a universe of 812 tradable stocks, and I think I originally gave you guys 1,300 in there. I've cut it back to about 812 for those that get closer to a million. I can provide that list as well if you want. I want to scan through not only the earnings list, but I want to scan for good daily chart setups. Remind me at the end here, Valerie, so I can do that. It's your responsibility, or you can ask later. I'll be happy to provide it. Then non-earning stocks. Look at those and see which ones, like Match.com and Square. Both of those came up overnight, and I didn't get it early, or very early in the day for Square. I think I got it close enough, and MTCH, we got it, and it's hitting our targets, and they're working well. So what we need to do is to look for stocks that have good setups, like this is Match.com, and it's in an upward move. I've already marked up in a prior time when it came back up here before, that about 45 and a half. 47.75 would be a lower gap fill. The higher gap fill is approximately 51, and the higher swing level fill would be 53.75. What really gets my attention is that it has 37% of the float. Well, I get that from shortsqueeze.com or FinViz or either one of those, but I put these directly on my chart. I mark them up, leave them there, and only when they get well out of, well beyond those price levels will I actually remove those. It's because you never know. I might have marked it up back over here and it pulled back and it went off my list. And I have two different watch lists out there. I have a watch list for today and a watch list out there for somewhere in the future. The future stocks is going to be a much larger list, and I look at it at night. The I'm going to trade this today list is usually I try to keep it to 20 or stocks or less. Sometimes it grows to a bit more than that. And then I'm going to try to narrow it down, and we're going to talk about that in a minute, to a more manageable number. You can't watch 20, but you could use alerts. And that's another thing that I do on my big, long, huge watch list. Could have 50, 75 stocks out there. They have those levels, and I set them for alerts. And then you hear the little jingle in the background, and I'll check on it and see what they're doing. All right, but you've got to create your list of stocks to watch. Like I said, approximately 20 or so. The night before, you can make it a larger list, and in the morning, maybe while you're having breakfast and whatever, 8:30 or so, maybe you've already done some of your homework the night before, but you're finishing up your list to create a watch list, maybe on some stocks that you hadn't heard of. Maybe there's some news out there that happened that only got released in the morning, and you add or delete stocks from your watch list. Now, you want to ones that you're most interested in, you must definitely mark them up. For mark the support and resistance levels, because the stocks, I hope I've proven to you that they move in waves from swing level to swing level, or price levels to price levels. And it's very important that you have those already marked up, because in the heat of battle you'll miss it. And I missed it on Alcoa. Let's see. I missed the fact that I had a 30-25. I didn't go look at the daily on StockTwits, and I didn't transfer it over to my Thinkorswim chart. So once it got up into here and I saw it hitting the 29.50 level or something like that, I said, it's probably going to stop, because that's what we hit, 29.50 in the couple 3 days here. Well, if I look back a little bit further, I was seeing the fact that it might go a little higher. And we got out a little early. It wasn't grossly early, but it was enough to be slightly annoying in that I didn't do all of my homework. Okay, so it wasn't a perfect trade. Check the futures in the pre-market. That's really the first thing that I do. I go and I say, how are the overall markets? Because where the overall markets go, I'll say the vast majority, some people will put a number to it. They'll say 75, 85, 95. I don't know the real number. They don't know the real number. They're just making it up. I'm going to tell you the vast numbers of stocks are going to move with the market. You need to know if we're gapping up, gapping down, or sideways. Why is that important? If the overall market's gapping up 0.5%, and the stock you're looking at is gapping up 0.5%, it's relative to the market, it's just gapping directly with the market. What if it's gapping 1%? Well, it's stronger than the market. What if it's only gapping 0.25%? Then you're not gapping up with the market. You're less than the market. It's important to know the relative strength of what you're looking at. All right, and that'll help you narrow down some of the things. Are there going to be any economic reports? They may or may not affect your stock. If you have an oil stock, maybe the oil report that comes out is going to have an impact. If you have a housing stock, maybe housing starts and home sales is going to come out. If you have a automotive stock, maybe the reports on automobile sales are going to be important. Or retailer, and you get retail sales. Find out what's going to be out there. Econo Day is a very good one. Briefing.com is okay, but I love Econo Day. The Econo Day, that's the best. Now, and you want to look and see if you have any swing positions or positions you held overnight, or even core positions. Look and see what they're doing. Are you getting a massive gap up in something that you have a swing position at? You could take some profits, maybe in the pre-market. Put out a bid, limit order to sell at a ridiculously high price. You might get filled. Is something gapping way down that you've been waiting for a pullback? If you want to really stretch yourself, you could put in a ridiculously what I call a stink bid and get one that's really low. You might get filled, and then it flips right back around for you at or after the open. So you have to decide what you do. I normally don't do anything to initiate a trade in the after hours or pre-market. What I will do, though, and that's the way I put it here, was I will evaluate my positions for taking advantage of, say, a gap up and selling. So I'll sell my positions in after hours on the pre-market if I get, gaps are a gift, according to Rick, and sometimes they are. And the last thing you need to do, and probably a really important one, last thing you need to do is catch your breath before the open. Don't be rush. Give yourself 2 or 3 minutes where maybe go get a cup of coffee or a juice or Go kick the dog. Walk the dog or whatever it is you do. Give yourself a couple of minutes before the open. Don't be rush, rush, rush all the way up till the opening bell. It's sometimes a bit tough, but we need to do that because if you get yourself in a hurry, you'll end up making mistakes. Haste makes waste, and that's exactly what will happen if you are running around at the last minute, and you'll probably make a mistake. You'll either overlook something you should have seen, or you'll probably jump into something that you shouldn't. All right. Punch the clock at the open. You've always heard me say almost every day, give the market some time to breathe. Give them a couple of minutes. Well, let's see if I can try to take care of this. I think I've got the pollen allergies here because I do take stuff for it, but I do apologize. Don't trade the first 3 to 5 minutes. 2 to 3 minute. I used to use a 2-minute opening range on earnings gappers. I found that that's probably not giving it enough time. And you notice from a 3-minute opening range on it, I'm going to show you in a bit for Alcoa, that was just barely enough. Normally, for non-earnings related, not fast mover because there's news, 5 minutes works. Anything more than that, I think you're going to leave too much on the table. If you're a day trader, now people who are swing traders will use 30 minutes or an hour or whatever. Okay, they want to get the big trend. Well, that's not me. That's not why I'm here, and that's not the way I trade. That's not my strategy. I want to get into that first 30 minutes where it really is volatile and moves. I may be in and out in 5 minutes or maybe even 5 seconds if that's what it takes. Okay, so the whole idea is for us to decide what kind of trader we are, what kind of strategy we're using. And my Alcoa trade, I was in it for a whole 15 minutes today. That's with the 400 shares. So in at 941, out at 956. So I had to let it go for about 10 minutes before I took the first profit, and I had to take a little bit of heat. But that's all part of trading. Anyway, let's get back to the idea is don't be in too much of a hurry, and I'll talk about that when I get to the reversals. That the first 5 minutes is the stocks are really just now opening, and you're getting rid of all the overnight orders, the pre-market orders, all the brokers that call I'll call them the sell side brokers who are calling their clients trying to get them to buy something. They're selling something to them. And then their orders will get in. Some of them will be market orders. What does that do? If it's a market order to buy, it pushes price up. If there's a whole bunch of market orders to sell, it'll push the price rate way, way, way down. And then more normal, after about 3 or 5 minutes, those frantic orders from the overnight hours in pre-market have all been filled, and now the more regular traders take in. I call them the pros. Watch the spiders, the Qs, and the IWM to give you a clue. Are your stocks moving in that direction, or is the overall market taking off? Is it just flat as a doornail, or is it diving and going up or down? You got to know, and you got to know your relative strength. And step through your watch list. Now, if you've got 3 or 4 that still look good, they were your primary candidates, stay with them. Maybe take a quick glance at your watch list. Like, this is my watch list that I've got right here. It is quite long, but it does have a number of things on it that will be taken off at the end of the day because I'll add them as I see them. And one of the things I've got it sorted by is the percentage movers up and down. And I will focus in on a few of those that I might be interested in. I can remember the, dollar numbers like $47.75 for Match or $69 for Square. I see those. I go, oh, let me go take a look at it. All right. But you can step through those pretty fast if you've got a list and you don't have to type them in. You just punch the button. And if you need to, adjust your swing levels. And they must be on your chart. Why? Example today, $30.25 was not on my chart. And if it had been, it might have alerted me on Alcoa to maybe hang loose a little bit with that last 100 shares. Now, one thing is that it could possibly have been off the chart to the top. So maybe having the daily chart along the side if I'm in that trade somewhere. So I might have to have 3 different charts. I might need the 5-minute chart if I'm trading it, the 3-minute chart if I'm trading it. That would be one. A 15-minute chart was just kind of the daily intermediate trend. And a longer term trend would maybe be an hourly or a daily. So you can see those. All right. What about opening range? What is it? Had somebody say, show me what it is. Okay, well, here it is. Opening range is the difference between the high and low of a specified period. And for me, it's 3 or 5 minutes. I have a 5-minute chart here on Alcoa, and I have a 5-minute opening range. And if you look at this very first candle, it got as high as about 28.39, just under 28.40, and it went as low as about 27.40. So it had about $1 range. Now, the body was a lot tighter than that. And you noticed after that, most of the body stayed fairly close together until we got the big move over about 28.60. Now, what does this tell us? Well, this tells us that we were trying to figure out which way it wanted to go. This was a battle of the bulls and the bears. Now, originally, from the day before and night before, I was thinking, well, yeah, we're going to gap down and we may wallow around here a little bit and then we're going to go lower. So my bias, and I say bias with a small b, was that it was going to go lower. That's why I was fully expecting it to go lower. And the reason I say that, here's Alcoa Daily. Let's move over here. We were trading down in this 27.50 area. I was fully expecting us to go down to either 27 at a minimum, or maybe even $26, or heaven forbid, maybe 25. Now, once that didn't occur, I need to be nimble enough and not married to my bias. What I really have is a thesis rather than a bias with a capital B. Bias with a capital B is you're locked in on this and you're not going to give up and you're going to be stubborn. Well, we're not going to be stubborn. I had the bias to short. I actually had shorts on. And once we got up here and it looked to me that we were not going to go lower, I closed those. I didn't wait. So I lost maybe, I think about $100 on the overnight trade, because when I closed it, all the premium got sucked out. All right. But I was long and I more than made up for it. Okay, why and how do we use it? Well, it confirms the direction. If we trade above the 5-minute opening range, we're not the only ones looking at this. If it trades below that, that gives a direction. It goes. So basically, it confirms the direction. And one other thing that's really important for a day trader, it prevents us from being on the wrong side of the trade. It allows me to get out of a bad trade before it becomes a really bad trade, like this morning. And I actually then change my outlook that it was going to maybe do a gap fill or better. Why don't I go long? I had a pretty tight stop. Stop would be 27.90 or so, and it'd be less than a 50-cent stop. Okay, so I was flexible and nimble enough to change my outlook and to trade what I saw. Here's the reversal times. Now, why do I come up? I have minors and majors, and it'll be self-evident in a minute when I talk about those. The market moves in waves. It doesn't go straight up or straight down. It just kind of goes a flurry of buying or selling, and then it kind of subsides. Another flurry, and then it subsides. And that's the little wavy thing, and that's where the J hooks come in and whatever. Be that on a 1 or 2 minute chart, a 5 minute chart, or 15. Well, why? It's caused by an imbalance between the buyers and the sellers. If there are more buyers than sellers, the price is going to rise, and at some point, buyers aren't willing to step up to the higher prices, and it subsides and the price comes back down. Vice versa, if there are a whole bunch of sellers, sell, then people have got they're all the supply of sellers dries up, price will tend to rise. And that's why the first is 935 minor reversal. Why? I talked about those overnight orders and the pre-market orders, and I call it the retail amateurs that are jumping in there, and then they buy, or sell based upon their emotions, and then the pros take over. And then, so we might get a reversal at that point. You may get a spike down and then a move back up. You might get a spike up and a move back down. Well, let's go back and look at our Alcoa. Alcoa did the spike down. It kind of stabilized here, gave me the idea that, oh, this is a 5 minute chart. We're going to get above the 5 minute. We're getting a 5 minute reversal, maybe a 10 minute reversal, because it showed that it went up here and then came back down. Is that a bearish candle or a bullish candle? It could be either one. It really depends on what the next candle is. But we went up and then came back down, but didn't go down as low. Went back up there and came back down. It made me feel more and more confident that we were probably going to break to the upside, because we were having higher lows and equal or slightly higher highs. Now, emotionally, it takes a little bit of intestinal fortitude to stay with it, especially back over here. All right. Where are the other reversal periods? Well, let's talk over on the left-hand candle. The first 5 minutes we talked about due to the overnight buy and sell orders. Other times could be due to economic reports or black boxes, algorithmic trading. Well, 10 o'clock is a biggie because we have a lot of reports that show up at 8:30 in the morning. We know that. In pre-market, that's cool. And we can watch that and we can see how the markets react to it. And we also have a number of reports that show up at 10 o'clock. And when they show up at 10 o'clock, we could get a reversal. And we've also had 30 minutes of buying or selling in the market. And it could start to dry up. All right. 10:30 minor reversal. Probably more than likely it's the fact that it's the oil report and it shows up once a week. It becomes minor. But again, it's an hour into the trading day. We could get a reversal of the reversal. Now remember why we talk about, or I talk about every day, between 10:30 and 11:15, we many times, not all the time, but many times we get a buy or sell programs come in that time frame. So we need to be looking for those. The others major reversal could be right at 11:30, because between 11:30 and 1:32 o'clock, that's lunchtime. Now, it may be a little bit less so than it was, but the reason I say that it's major, the volume starts to dry up a little bit. Price could still move, but price is usually driven there by algorithmic trading, the black boxes. I don't want to trade against them. I will lose. And so therefore, I want to be out of my trades ostensibly by 11:30, and that means that I probably don't want to initiate any trades after 11 to 11:15. Unless they're really, really, really super setup, I'm not going to initiate anything after 11. All right. 2 o'clock, what happens at 2 o'clock? FOMC, people coming back from lunch, people thinking about, how are we going to position ourselves for the rest of the day. People that had buy orders from their the trading desk has to get orders filled. They get paid on their ability to buy or sell shares with an average price. If they didn't get it accomplished in the morning, they've got the afternoon to do it. And they do this over 3 or 4 days. They don't necessarily do it all in one day. But you better know that in the afternoon, if they're not doing as well, they're going to start bidding it up or selling it low at higher prices type of thing. So 3 would be a minor reversal. Nothing really biggie other than it's another hour into the afternoon trading. And 3:30 is a major reversal period, primarily because we're coming into the close and people who are having to clear out their books by the end of the day. Maybe there are margin calls. Maybe they're taking their profits if they're day traders. Or if they're not a day trader, they go, yeah, I'm a swing trader. It's gotten close to my number. I'm going to go ahead and take what I've got. So a lot of people start to close up their books by that between 3:30 and 4 o'clock. I've been asked, when does the morning session end? I've covered it a little bit, but I want to say that most of the trading volume is at the beginning and end of the day, the open and the close. I think you probably already know that. Well, the biggest and fastest moves are in the first 90 minutes, not in the last. Again, FOMC aside, any exogenous events, things we can't, terrorist attack or anything like that, well, I'm putting that aside. But things that we know about, by and large, the biggest and fastest moves are in the first 90 minutes. I want to trade that period of time because volatility, to some degree, is my friend. All right. I don't want to initiate any new trades after 11 a.m. Eastern. I told you why. Okay. I want to be flat during the lunch hour, primarily because the midday trading is dominated by the black boxes. That is choppy markets, big reversals, and can lead to losses. And I don't like losses. So my journaling from my early days of day trading told me a couple of things. It told me which days of the week were bad or less good. But Friday was almost always a bad day for me. Friday afternoon was the worst of the worst days. Well, now, Friday's my best day. I probably said this to you before, but I'm going to say it again. I changed it from, they run the markets because the regular volume is dried up. The institutions aren't there. The algos are in charge. They're making up most of the volume in the midday. Now, that doesn't always come to be. You can sometimes make money during there, especially if you're getting a trend. But if you ever see anything that looks and smells anything like a chop, stay away. Now, I'm not saying that you can't make money at lunchtime. I can say only this is what I do. And I'm trying to show you what I do and what I've been doing for the last 9 years. Every day I went out there and I find that if I try to trade during lunchtime, 11:30 to 1:30, those 2 hours, by and large, I will not make money. I might break even and I might lose a little bit. And why do I need to take the risk? Now, if there's something that's going, maybe there's some news out there. Sometimes the stocks will move around noon. Sometimes the stocks will actually move in the 11 to 11:30 time frame because Europe is closed. And now they're out of the way. Now that's another reason why you'll see a kind of a dry up in the volume because the people from the European markets are going home, they're quitting, and there's a little bit less buying back and forth arbitrage. All right, but by and large, I don't want to trade during the lunch hour. I need lunch too. I also need a psychological break. Take a break, walk away. It doesn't hurt. We don't have to be every minute. And there are times where you may have met your quota, or the quota may have gotten you. And you then say, crud, I'm out of sync with the markets. I need to stop trading. And go do the honeydew list, go play golf, go shopping, whatever it is. Get away from trading for a while. Clear your mind. There's a lot of this is all about psychology, and I don't want to I don't know. I don't try to over complicate things, but your brain will get fried very quickly, and when you get in that case, you'll end up probably making mistakes and regretting it, losing money. All right, afternoon trading. I've been asked, well, why don't you trade in the afternoon? One, because I have a regular life. I have other things to do. I'm running the household here. My wife runs her agency. She goes in, 8:30 in the morning, and I'll be lucky to see her 8:30, 9 o'clock at night. For most days. Anywhere from October to March. Maybe in the summertime it's a little bit less. But she has so many clients now and tries to take care of everybody. That's what she does. Well, and I don't want to be in here and fry my brain. I've got my mother I'm trying to take care of. Well, again, we've got a regular life to do. Everybody needs balance in their life. And if you're only sitting here in front of the thing full time, you know what's going to happen. You're going to burn out. She's got an insurance agency, primarily Medicare, long-term care, senior insurance type stuff. And people say, oh, yeah, but you live in the land of the walking dead. Or God, what is it, God's waiting room here in Florida. Actually, about a third of the people in Florida are actually under the age of 30. I didn't know that. I read that just recently. A third of them are old like me, or older. But, it's basically a balance. Said, should you trade in the afternoon? Well, my journal proved to me that I have more success in the morning than I did in the afternoon. That's a very nice way of saying that I would make money in the morning and give some of it back in the afternoon. Right. So, what options do we have? You continue to trade with no restrictions, do it just like you did in the morning. Okay. Some people can do well. You could maybe if you're seeing that it's tougher to trade in the afternoon, trade smaller, trade faster. Not only do you trade smaller, you'll take smaller profits. Be selective in the trades you take, and that's what I did for Friday. My journal told me that I was losing, and I said I either don't trade on Friday, like tomorrow I'm out, but if I miss a Friday, if I have to miss a day during the week, Friday's the day, because it usually turns into a crappy day. What's going to happen tomorrow? I can guarantee you things are going to be a bit funky in the afternoon because we have a 3-day weekend coming up, and some of the traders may come in on Friday morning and take off midday and go to the Hamptons or wherever they go. Maybe go skiing over the weekend. Maybe just take time off and be with their family. All right, so Friday afternoon before a 3-day weekend, especially in the summertime, it can get slow. Do we want to be trading slow and fighting the algorithms? I don't think so. All right, but you could be more selective in the trades you take, and I did that on Friday mornings, and I turned the worst day of trading into my best day. Now I say best day average-wise. Now, another thing you could do is only trade the close. So you know what happens at the end of the day, and you know what might happen in the morning. You go, well, okay, I'll jump into this maybe with options in the last 30 minutes of the day and see what happens tomorrow. You finally could just sit on your hands and compile or refine your watch list. Number six is walk away, take a break. All right, let's see what we got here. Journaling. One question I get is, do we really have to have a journal? The answer is no. Yeah, I've noticed a couple of my stocks are taken off. Um, the S&P's up 30 points. Dow's up 250. You know, it's almost time for me to take some square off the table. But I think there's not a question that especially for a new trader or when trading a new strategy or a new instrument, you've got to have a trading journal because you need to learn the little nuances of what you're doing. Okay? So without that, you might do okay, but you'll do a lot better if you actually take the approach of I want to analyze this and really closely figure out exactly what I'm doing and what the results are so I can refine it. Now, I would strongly suggest that the new traders do it and they do it for 9 or 12 months. And I posted up the journaling example. It's very detailed. You don't necessarily need to fill out all the boxes, but if you've got time, go ahead. I think the most important thing to record are your comments. What were you seeing? What the hell were you thinking? The strategy and any good or bad decisions that you made. Got in early, sold too early, got out too late, didn't see such and such, blah, blah, blah. And then what it does is if you start to see a pattern and it's not a good pattern, you try to correct it. If it's a good pattern, you try to repeat it. And I believe this is a profit and loss is the least important part of your journal. Really doesn't care because the idea is the process. You get the process right and do the right things, the profit and loss will take care of itself. All right. And one thing you got to do is you got to complete the journal entries as soon as you can. I said as soon as possible. That doesn't mean ASAP because you got to do it right now. As soon as you got the trade done, you got to enter it. No, you got to manage your trade. Don't let it interrupt your trading. But the longer you wait, the more you're going to forget. It will just start to fade off very rapidly into the distance. So the idea is get it in there, maybe get your setup and your whatever. The actual price that you bought and sold at are not going to change, and you can go back and reference them. What's really important is those comments. Get those comments in right away. All right. I had another question. I'm not going to make a whole chart for each one of these. Hey, do you wait for a candle complete before entering a trade? No, not always. Sometimes I do. Sometimes I don't. Well, when do you? When you don't? This is the art part of trading. When you think you see the momentum going, you sometimes have to jump in. It will take time before you get that feeling. Until then, you need to probably have rules, and that if it goes up through blah blah, maybe if there is a movement and it goes through the. Yes, it is, Bob. Oh hell, yeah, it is. Yeah, it is. Ah, you scared me. I saw the pause button. Yes, it's being recorded. All right, is it taking too long? Need to go somewhere. And so it's really an art. It's an art that you have to decide what level, what volume is going. Maybe if it's, the markets are just blowing up, you need to either get in or get out. It's going to have to be an art. You have to get a feel for trading. And how do you choose your swing levels? Well, they're mostly based upon price overlaps. And let me bring up a chart here, like Match.com. This is a 1, 2, 3 pattern, continuation pattern. Very high probability. This is a daily chart. It it was fighting this 45 and a half, which actually goes all the way back over to here. But then if you see where my volume at price levels are, this is kind of a little bit of a void between this 45, I call it 46 level, and maybe as low as 49 or 50. My target's 50. Does that mean that I will hold out till 50? Well, no. With the two contracts, I'll probably sell one of them probably at the end of the day. And I'm looking at my stochastics RSI, and it's curled back up. It came off the 50% level roughly. That's the strongest of the strong do that. So you got to really be able to see it. I normally don't watch volume at price intraday. Now, I'm talking about an intraday chart. You can get it, but to me it gets a bit too busy. What I try to do is mark up logical points, like, let's see, 15-minute chart. Yep, that 47.40 level was key here on Match. This 47.80 is going to be a key. What did we do first thing in the morning? We opened up, we pulled back, and then we started to go. And where did we take? Oh, that was yesterday. And today we took off from the open, and then pulled back. Where did we go long? We went long on this move back up. Got it a little early. It came back and retested to 46 and a half, and then took off. All right. So you got to get a feel for the markets. Come on, there you go. Let's get back. And you got to feel for how you mark up the charts. They're primarily based upon where price candles overlap. There's really price overlap, and the volume of price. And that's mainly where I do it. And I'll start them on the daily, and then when I drill down, if I see something else, I'll add to them. And that's why you get on the SPY. I've got so many of those yellow lines that it looks very, very busy on a daily. Well, that's because I'm marking up the 15-minute chart. All right, what setups or patterns do you find work best? Well, for me, I like the J-hook intraday on dailies, either one, because it's a price move up. It proves that the buyers, again, I'm talking bullish case, that the buyers are stepping up, and then they're getting a pullback, and it's a natural wave reaction. And I'm waiting for that cycle to occur, that we get the move up, we get the pullback, and I'm waiting for this little curve right here. And I don't want to bite off too quickly, but I don't want to bite off too late. I don't want to wait till I get ultimate confirmation of going back above the swing. There's usually some sort of candle right back down here and another candle right here that's bullish, that I can go long there with a stop either very, very wide or tighter, or I can do one that's really, really tight, depending upon how big this is and how much I believe that it's going to go up. So I like to buy down in here because you get a tight stop, and because you've got your first target, which usually gets hit right up there, and now you're playing with house money. It would have to go all the way back down to where you bought it, plus that distance, for you to lose money. Once I can get to that first target, I can't lose money. I would have to really, really screw up to lose money on the trade. And that's why I like to buy down at the low dip. I can get a tighter stop, and I can usually make it a profitable trade. And if I can make a high enough percentage, I don't have to have home runs. I've decided that I'm going to take smaller profits, more frequently and more quickly. That's just the way I've decided to trade. Some people, they don't want to take anything less than a 5 or a 10% winner. Okay, not for me. Continuation patterns. What did I just show? I showed the 1, 2, 3 continuation pattern. I showed the what do I call it? A sandwich where you have a bearish candle in the middle of two green candles. I like hammer reversals. Now, one thing, okay, yeah, let me show that again. All right, let me mark it up. Right there. Green candle, usually something that's a doji or doji like, and then a green candle up. Now, the reversal that I'm about to talk about here would be something like this, where what are we done? Yeah, let's see if this is going to work. Up, back, up. Well, here's another one right here. And there is a high wave doji. Well, let's take it right here while we're at it. That right there is showing that the buyer stepped up. My stochastics RSI is at the bottom, curling up. Where would I go long? Probably right about here. Some people say your stop's got to be down here. And I went, well, not mine. Because if it went up and started to go up like this and triggered me in, if it goes back down underneath this level right here, I've already proven my premise is wrong. Do I need to let it go all the way down there? Now, on a daily, no. On a 2-minute chart, maybe. Depending upon what the volatility is. So it all depends. Mostly, I say, you know what? Get out of Dodge. I can always get back in. It's harder. It's easier to say than it is to do. Now, let's show. Remember what I was talking about. I was talking about getting in here. Whoops. I hit screen draw. And I hit the yellow button, but you didn't pick it up. Okay. I'm talking about buying the reversal, the hammer, the move up, and where's my first selling point? Right in here. And then you could possibly give it room. Well, I would be a little bit hard pressed that if I got that much of a pullback, I probably would be down on the daily. I'm going to be out somewhere on the second day down. And I will have made the profit to there and the profit to there. Didn't maximize my profit, but I optimized my profit because I gave it a chance to break out. But it didn't. And now the art part of reading the chart. First time up to a resistance level, you're probably not going to break out. Second time up, you got increased odds. You could break out. Third time up to a level, you're probably breaking out. Now, what did it do? Once it broke out, it came back to where? It came back to the breakout level. Happens all the time. Where's the ideal place to buy? Hammer reversal after it proves that it wants to go higher and it pulls back and it says, you know what? I'm not going below 42. We also have high short interest. That tells me we're probably going up to the 50. Not the 50-day moving average, but the $50 level. All right, let's go back. Hope I digressed a bit. I apologize, but it happens. Go up, down. All right. So I talked about the J hook. I talked about continuation patterns and the hammer reversals. And a lot of times, the J hook and the hammer reversal are combined together. That's even better. Now, how do you set targets and stops? Price tends to move between swing levels. You saw what I just did on the Match.com. I set it up for swinging between those two levels. Now, will it always beat your targets? We saw what happened on Alcoa today. 30 and a quarter, boom. What happened? It ran to the sellers. Price went back down. Does that mean it's going to stop forever? No. Could it? Yes. What do we do with that level? Probably take some profit if we haven't already. All right. Last question there is, which time frames do you use? I use 3 or 5 minute chart earlier today. I do like to use Renko charts, but they don't plot well with stocks. They don't. The futures, they do great. Um, they help me do the trend, the Renko chart. I'll still be playing with them to see if I can get it any better, but um, I've not really had a whole lot of success lately with those. 15-minute charts to help visualize the trend. So that's what you're going to see on the spiders. I've got a 5 minute and a 15 side by side. When the other chart that we have down below, right here, Match.com, I've got a 5 and a 15-minute chart. Okay. Yeah, I'm using this to help judge the overall trend. You know, because you go, okay, well, this is starting to sell off. We get careful. Sell, 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 sell. Oh, wait. What's this doing? Well, it's pulling back. Where did it pull back to? 47.25. If it breaks 47.25, it's time to get out on a short-term trade. All right. Probably didn't optimize my trade while I'm in here. I want to say we lost a really good gentleman and a man who provided great service to all the traders in the world today or last night. Mr. Jack Bogle from Vanguard. He was a real character and an absolute gentleman. You know, and anyway, I never met him, but I could tell from the interviews that he wasn't full of himself, right? And pretty smart. Now he was a buy and hold guy. I'm not a buy and hold guy. I have some buy and hold stuff. I did it when I was working. All right, let's. You guys have any questions out there? We're gonna call it quits after this. And while you guys are maybe typing in any questions you have, I'm gonna look and see if it's time to take any profits out there. Nope, they've already pulled back. I needed to take profits 15 minutes ago. Square and Match would have both been pretty good. I'll just hang loose for now. Match is probably getting close to a sell. Oh, yes, it is. Oh, where are you? All right. Square is still going up. Square's time to profit. Stand by. All right, I'm out of square and match. All right, no questions. All right, we will stop the recorder.